What is up, everyone, and welcome to another episode of Personal Finance Boss. I'm Julian, and with me is Ali, as usual, and today we will be talking about credit scores. So, what's your view on credit score, Ali?
My view,
Yeah,
it's a very important number. It usually is the make or break between
many
whether
things.
you get many things. In the States, I think it works a little bit differently than how it works here. I think in the States, there's a
Well,
little
then
bit,
the scale is a bit different,
yeah.
and
this-
the companies that monitor that are also different companies.
But nevertheless, your credit score is very important in getting loans, and getting mortgages, and getting car applications, in getting financing from a furniture shop. They will look at your credit score.
Really,
I kid you
financing from a
I kid you not, because the company has to protect themselves. So
Yeah,
if you're not able to get financing from like a Best Buy or a Future Shop on an appliance, you've got big problems if you want to buy a house and get a
well,
mortgage.
if you can't buy a stove, there's no way the bank is gonna, in Canada especially.
Yeah,
I mean now it's all
exactly.
the same, but there's no way a bank's gonna let you buy a house if your credit score is terrible.
Exactly. Unless
So-
you're sitting on a mountain of cash and can buy it straight up.
Yeah,
But
then you don't need credit.
So
So you don't
highly-
need the bank.
Highly doubtful, but yeah, and you'd be surprised at what can actually increase the credit score and the small things that can actually decrease it quickly. And it takes
Yeah.
a long time to build that
Yeah.
back up. So it's better to start early, start right away, get that as high as possible, and maintain it.
Yeah.
And you're
So
good
the
to go.
overall approach to it would be like, let's say when you turn 18, it takes about 3 years for you to start to develop a credit score.
Mhm.
So let's say, by 21, you'll have a score. It may be good, it may not, depending on what your payment habits are. But, the idea is as soon as you turn 18, you get a credit card. If the bank doesn't want to give you a legitimate credit card, you can get a secured credit card, meaning you give the bank $500, they hold it, and then they give you $500 credit card. So even if you don't pay it or you default on payments,
Mhm.
they have the money aside. So it's
Mhm.
kind of like a zero risk thing for the bank.
Mhm.
So that's one way to do it. Or you can just get a credit card if you have an income or whatnot.
Yeah.
Then you can get one.
Get a credit card as soon as you can.
Yeah, and then
Is a good piece of advice.
yeah,
And if you're worried about overspending on it or worried about control, like June said, set the limit low. Set it to
yeah. Well,
Set it
they
to
will
the lowest
usually
you
set
can,
it
yeah.
low if it's
set
your
it to
first.
the lowest you can. And you don't even have to. A lot of people think credit scores are about money and having high net worth and having millions of dollars. No, it doesn't. That's absolutely not true. You don't need to have a lot of money to have a good credit score. You just need to be organized, punctual, and
Yeah.
and
So
smart.
yeah, the idea is, for a credit card statement, the cycle is once a month. Once a month the credit card statement comes due, and then you have 2 weeks to pay it off. So say you spend $200
3
in the
weeks paid off.
3 weeks?
21 days.
Okay. So say you spent $300 in the first month. When you get the letter, or when the month is done, you have 3 weeks to pay it off.
Yep.
And if you don't pay it off within those 3 weeks, or you pay it partially off, then that'll negatively impact your credit score. On a statement, there's minimum payments, and then there's full payments.
Doesn't. You have to for it to impact your credit score. You have to miss the payment or not pay the minimum payment.
I feel like if you have a large balance on the card, that's not as good as for the
But
credit
if you have
score.
a large balance and your minimum payment is higher, usually.
Yes, but keeping a large balance on the card, from the research I've done,
Okay, is not a good
is not so.
idea.
Same thing for a line of credit. If it's a $5,000 line of credit, and you max it out, even if you pay the interest payments on time, it's going to impact your credit score versus having $1,000 withdrawn out of the 5,000. So that's just, you don't like that, eh?
I don't like that.
You
I
don't
think
like
I think what it would impact is if you went to secure additional financing, it would impact your ability to get that financing. Because when they pull your credit score,
Yeah.
they'll see you have a lot of revolving credit on a credit card
Yes.
or a line of credit. So I
I
don't
agree
think
with
I don't
that.
think it would affect the score. I just think it would affect your
But
ability to secure additional.
Isn't that the score? Because the
that-
credit score has to do with
wouldn't
getting additional.
It wouldn't affect the number. Like it wouldn't if it was like a
Fine,
680,
let's
for
agree.
example. It wouldn't
Let's
affect the
agree to
680.
disagree, and then next week or whenever we do the next show, we will confirm that. But we just have to remember to do it. But I'm pretty sure that, and I was told people that worked at the bank, not that they're very knowledgeable
They're
in the field,
so reputable.
not that they're very reputable, but if you do keep like 80% of it withdrawn, then it's going to affect you more severely than if you don't.
Mhm.
So that's one thing. So now the way it works in Canada is, it goes from 300 to 900, and obviously the higher the number, the better the score. But let's say like there's different brackets, but from 750 to 900, your score is considered excellent. From 650 to 750, it's good, and then it gets progressively lower. But if you're already in the excellent category, going from an 810 to an 830 doesn't necessarily impact you that much. But if you go from a good to an excellent, then you can get lower interest rates when you borrow, and you can get approved for a larger loan or more loans, because you pay off your credit, right? So things that could affect your credit score are obviously credit card payments, loan payments, mortgages, but things as simple as paying, let's say, your cell phone bill. If you don't pay your cell phone bill, then that can also affect your credit score. Not paying your hydro bill also affects your credit score and things like that. So it's not just debt tools that you take from the bank, so credit cards, mortgages, line of credits, or home equity line of credits. It's also anything around you that requires a certain amount of trust. So you use electricity for a month or 2 months, depending where you live, and then you pay it every 2 months. Well, they kind of fronted you the money or the electricity for free, and then they trust you to pay it off 2 or 3 months later. So that's why it'll affect your credit score, right?
Yeah. Biggest thing is paying the bill on time.
Yeah.
I can't stress that enough. Pay it on time. People say like, oh, I get the statement, it's due in 3 weeks. You can set an automated payment through EasyWeb or whatever bank you're using, and it'll debit your account.
Assuming you have the money, right?
Assuming you have the money, of course. It'll pay it off 3 weeks from now.
If you don't have the money, doing the minimum payments is 1,000 times better than missing a payment. Missing a payment, it really hurts. And it takes a long time to regain it. Even if you forget, you're like, oh, I had the money, but I just forgot. It really does impact your credit score.
And the minimum payment usually is like $10 for most things. Yeah. And if you can't fork over the $10, we got more problems than dealing with a credit score at that point. So keep that in mind.
And another a myth towards credit scores where people say, oh, well, checking your credit score actually lowers it. It's not true. Checking it just to check it, not applying for credit, but checking your credit score does not lower your score. But let's say you apply for a mortgage, you apply for a loan, you apply for a credit card, things like that affect your score. If you get declined, it affects it even further. So try not to apply for credit too often, but you can check it as often as you want. Now, depending on where you live, sometimes you need to pay for it, sometimes you don't. In Quebec, I'm pretty sure we need to pay for it.
I don't know. I've never actually checked mine.
No? Okay. But they'll give it to you at the bank, because when you're applying for the mortgage, they check your credit score, but they told me that they're not actually supposed to tell you. But, if you ask them, they probably will. But
they'll charge you a fee, too. They'll charge you a fee.
Probably. But, so if you have a great credit score, the rates on mortgages, the rates on line of credits are lower. So it's advantageous and it's cheaper for you to borrow if you have a good score. But if you have a bad score, then they charge you more interest because it's their safety net, right? If you default on a payment, you can't pay for 6 months. Well, since they charge you higher interest, it kind of compensates for, the lack of money. Yeah. And also to achieve a great credit score, like to be in the excellent category and above, like, the 850, whatever, it takes about 7 years. 7 years of religiously paying your bills on time and not missing payments and having enough liquidity to pay your bills, but having credit products. Because if you don't have any credit products, you don't build credit. You don't build credit. So if you wanted to, you're saying, oh, I believe in buying everything with my debit card or cash because it's money that I have now and I don't indebt myself. It's a great way to think. But first off, credit cards usually have cashback rewards or travel. So, you get to save a little bit of money. Just don't miss a payment, because that's when that's the trick, right? The credit cards give you these rewards and incentives to spend on the card because they're expecting to make the money back when you miss a payment, right?
Yeah,
so
they want to charge you interest.
Exactly, which is really, really high compared
That's
to
why there's
other
balance
debt.
transfers also, because they obviously want to make money off of it.
What's a balance transfer? Explain it.
Balance transfer, so if I have, let's say I have credit card X, I have $15,000 on it, I can move that to credit card Y. I can move that $15,000 or whatever the credit card allows me because they're giving me a preferential interest rate. And usually that's for like 8 months' time. There's actually people that actually do balance transfers all the time because they want to save on that interest. So some offer like 6 or 10%, and they move that over. That does not apply to cash withdrawals on your credit card, though. Like,
cash advances.
Cash advances, thank you. that cash advance is a fixed 21.99% with any credit card.
Yeah.
They will not give you that at any other.
Yeah. So something else I wanted to add about the credit application. So if you're going for a mortgage, you want to apply. If you, let's say you want to go to bank A, B, and C, and you apply for the mortgage, to see what the rates are, to see what's the best deal, that'll count as one inquiry if it's within a limited period of time. So they're able to say, okay, this is in the same month. This counts as one inquiry, so it's not 3 different credit applications that'll negatively affect your credit score.
Mm-hmm.
So that's good to keep in mind because shopping around is obviously good because for some reason banks have different rates. Like I guess if a bank is overexposed in mortgages, meaning they have way too many mortgages, they're going to increase the rate because they're not as interested in generating business from mortgages. So it might be good to shop around, or highly recommended to shop around. And so when you apply for credit, when you get the credit report, they see everything. So all the credit cards that you have, all the loans that you have, all the mortgages that you have, all the canceled credit cards they can still see. They see your security, social security number, or what is it in the States? Social insurance. Social security is in the States, and social insurance is in Canada, right? And then all the things you close, and so you need to really think of credit as a long-term play, just like you think of investing as a long-term play. Credit is the same thing because whenever you want to, or if ever you want to buy a house or start a business or take out a loan for whatever reason, having a good credit score will really help you through lower interest rates and the ability to actually get credit.
And it can save you time also. If you need to get a line of credit for a health reason or a medical reason, you can't afford to wait at that time. You kind of need the cash, or you had a family and you need a mortgage. You can't afford to wait 1 or 2 years to rebuild that credit score.
Yeah.
Question for you.
Yes.
Does a high credit score automatically guarantee approval for a credit product?
Absolutely not. Absolutely not. Well, we talked about mortgages, right? There's 2 ratios, the gross debt service ratio and the total debt service, or something similar to that. And it has to do with income.
The debt repayment ratio. How fast you're able to?
It's your debt payments over your income, and then all for housing, so mortgage, property tax, school tax, condo fees. Half of the condo fees. There's a formula for it, and then there's total debt service payments, which also include car payments, credit card payments, and everything. And those ratios that turn around 40, right? So if you have a ratio of 40 or 40%, or below, it's good. But if your ratio is too high, meaning your debt payments are too high, then you won't get approved for as big of a mortgage. So what the credit score really does, and when you apply for a mortgage, it doesn't give you the ability per se to get a mortgage or not. Obviously, if it's terrible, you won't get it. But it helps to choose the rate. It chooses the rate for you. Like if we both applied for a mortgage and I get 3%, he gets 2.5. One of the reasons why would be his credit score. But the ability to get credit also has to do with the income that you make.
Yes.
It's probably a true story, So, it's another maybe a misconception or myth that people may have regarding credit scores.
I wanted to address that.
But it's really income, which is kind of frustrating, but that's the way it works. And in Canada, it used to, I think at some point you could just show two pay stubs, and that was enough proof, but now they want 2 years.
Really?
Yeah.
With pay stubs.
Or you take your notice of assessment. So notice of assessment is how much money you made in year 2016 or whatever.
I didn't know that.
So and they average out those two, especially for self-employed people.
Yeah, of course. Well, for those,
that's the only way to get legitimate numbers, and then they actually gross that up by 25% because they just assume that you make cash. So the bank grosses your income up by 25%, which is good to know. In Canada.
I gave 2 pay stubs years ago. Probably 4 years ago or 5
years ago.
No,
back in the day you could. Now I was told that I'm like, okay, but what about if I'm full time? You still need your. And always because the banks now they're like.
They're cracking down a lot.
Super scared, so they just want to make sure that they lend credit to
worthy people.
Yes.
Yes.
Yeah. So if you guys are wondering, that is a glass of wine. It's because I bought a bottle for cooking. It's a really terrible wine, but I mean, you never finish a bottle of cooking wine before it rots, especially because I don't cook that much. I'm just gonna drink a little bit every evening or so, I guess, make me feel a bit more sophisticated.
Make some pasta.
I can't eat pasta.
Oh yeah.
Remember?
Make spaghetti pasta and you can put some white wine in there.
Spaghetti pasta. I can't
Spaghetti
eat.
squash.
Oh, ugh, I don't know
No?
that that's gonna.
Or make like a cream based sauce or something.
I'll invite you and you can come make it for me.
Uh huh. That sounds like fun.
So just quickly, the two
Do a cooking podcast.
It's gonna something's gonna burn
Something's
down.
gonna go off
Actually,
the
no,
flames.
we'd have to do it at your place because I'm embarrassed with my kitchen.
Oh yeah.
It's so bad. Oh my gosh.
Uh-huh.
Anyway, the two companies in Canada that give you credit scores are Equifax and TransUnion,
Mhm.
and you can get them online. If not, there's Credit Karma. Is that the name of them?
Yeah.
But they don't operate in Quebec, so you can get your credit score for free, to my knowledge. But I didn't
Mhm.
look into it further because they said not available in Quebec and the territories, I
Mhm.
believe. Obviously, Quebec needs to be different.
No, you need it to be in French. That's why. And there's different laws and stuff.
Yeah, okay, but they just need to be different.
Yeah.
Always.
No, a lot of the equity offerings too. If you go on Questrade, they're not available in Quebec because I think like the prospectus and everything hasn't been bilingualized.
Yeah, translated.
Yeah, so-
Bilingual.
Bilingualized, so they just like, yeah, we'll just leave Quebec out of it.
Yeah. No, there aren't that many people.
There's a lot of it though. Amazon Prime too. The membership is different for Quebec.
Really?
Yeah.
I didn't notice.
Hmm.
Not that I'm a member, but
Yeah.
I did my
There's-
free trial like a couple of years ago, but I'm
Uh-huh.
not paying for that. I have friends that do it. Anyway, guys, thanks for tuning in.
Mm-hmm.
As per the usual, our podcasts are now on YouTube, which
Where
is
you can
actually
see our beautiful faces.
yeah, in my 1950s basement, which is I can't wait to move out. I have 11 months and
Mhm.
14 days to go.
Make sure you have a good credit score. Gives you time
Yeah.
to build the credit score to
Yeah.
get your mortgage.
Now cash is the issue. I'm gonna need
Uh-huh.
cash or down payment because
Uh-huh.
I like to do 20%. Because as we talked about previously, below 20, you need to
Mhm.
pay more money to the CMHC.
Get 30
Canada.
in.
Yeah, no, the rates aren't that high, so I don't see the need.
The
for
rates
that.
just went up.
Yeah, 0.2 or something.
Yeah, but
it is
they'll go up.
impactful.
They'll go up again in a year, I think.
Yeah,
They'll go up
yeah.
again before
Yeah.
you get your house.
Oh, Ali prediction hour. Okay, what other predictions do you have for us, Ali?
Okay, the interest rates are going to go up.
Yeah, but
And I
that's-
think the-
they're,
I think
they're
the
not
Ca-
going to go down, right?
No, I think the Canadian dollar is the rally was there this week, but I think you're gonna see a little bit more there.
More
Maybe going
like-
to dipping down maybe to 25%,
Okay.
which is I think like 27 right now, 28.
Okay.
I think it can go down to 25.
This is like fact. It's coming from Ali. He's
I
always
think
right.
no, this is my prediction. This is my prediction. So yeah.
Well, thank you for the Ali prediction minute.
Minute,
No,
yeah.
it wasn't very long.
Minute, yes. But we do have some interesting topics coming up on cryptocurrency, which
Yeah.
I look forward to a lot. So stay tuned, guys. Thanks for listening, and have a good night,
Or
evening, or day.
Yeah.
Wherever